So today I've got a good video for you. We're going back to the whiteboard, and this is a good one even if you don't own this stock. Hopefully you learn something from this video. So I've had a few questions or messages through maybe Instagram, YouTube comments in the last few days talking about, is it time to sell this stock because insiders are selling? Now this is one of the biggest myths in investing. When insiders sell, it's time to panic, it's time to sell your shares. And today I'm going to show you why it's one of the biggest myths in investing. You should not panic if investors are selling shares. Now there's a few cases where potentially it is a little bit of a red flag, but sometimes it's just massively blown out proportion. So we'll go through this today. So the stock that I'm referring to is Hims and Hers. We've covered it on the YouTube channel recently. The stock has done absolutely amazing. Now in the last few days, it has been having a little bit of a sell-off and given some of the gains away after its earnings. Now this is naturally absolutely fine because you shouldn't have a stock that goes absolutely crazy to the one side without having a bit of a pullback or a bit of a consolidation. Stocks cannot just keep going up. We saw what happened when stocks keep going up in the 2021 boom, and we saw what happened on the other side. Same with stocks going down. Stocks should not go all the way down all the time. That's a massive overcorrection, and that's what we saw in 2022 where so many stocks got beaten down. Hims and Hers went down to like $3.11. Boom, we shoot up. So stocks should not go up and down like crazy. There'll be times where there's some movements up and down, but it shouldn't be too exaggerated. So yeah, that's the first thing I'm going to say. There is, right now we have that going on at the moment where there's a healthy cooling off going on in this stock. But people are looking at stock going down a little bit at the moment and looking for something to kind of blame that on. And a few people look at this stock now and going, oh, the insiders are selling. Should we be selling? We should sell now. And that is totally not true. That is definitely something that you don't want to be doing. You don't want to just sell a stock because you see insiders selling, and we'll go through the reasons why and we'll debunk this big myth that has at the moment surrounding this. So there's a famous quote which is from Peter Lynch. I can't remember where he first placed it, but it is, insiders only buy for one reason. So when you are seeing insiders buy a stock, the only reason insiders are buying a stock is because right now they think their company is undervalued and it should be worth more, or they're seeing something positive happen inside the business. Buying is only bullish if the insiders are willing to put cash into their shares, and this is not being awarded shares. If they're putting their cash into shares, it's normally a really positive sign, and that's the biggest indicator that you want to be looking for if insiders are buying shares. Now ultimately that doesn't mean shares are going to go up, but it is a positive sign that insiders think either there's something very good coming in the future or the stock is undervalued. So that's a really positive sign. But Peter Lynch said there's many reasons why investors could, or insiders could be selling shares. So you want to be more focused on buying shares than selling shares. Now, we just talked about there, buying, there's only one thing that they think the stock is undervalued, and that's why it's been really positive to see some stocks recently, like the likes of PayPal. They bought a lot of insiders. Their CEO bought shares, Dan Schulman. But selling, if you're an insider, there's a lot of reasons why potentially an insider could be selling the shares. It could be to do first up with a lockup. Potentially when a stock comes through an IPO or a SPAC, which Hims came through a SPAC, there is terms where you cannot be an insider and sell for a certain amount of days. I believe the insiders is on SPACs 180 days, and I believe if you're an investment into the SPAC, you have to be, I think it's actually a year you can't sell your shares for. And it's the same with the IPOs. I can't remember the number off the top of my head, but it's about 9 months. Insiders that are in IPOs, you can't sell after being in that stock for 9 months. So the reason why is because you don't want an IPO and then the day after you see everyone inside the company can actually, just dump the shares off. That's the reason why. And also the reason why is that you've got to imagine a lot of these people that have been inside the company, they've not actually been able to sell their shares easy. When you're a private company, if you want to sell equity inside your business, it's actually really tricky. When you're actually a public company, to sell equity on the stock market, it's really easy. You only have to click a sell button basically nowadays. So to sell shares as a private company is tricky. As a public company, it's easy. So that's the other thing what they have to kind of stop people doing is like, oh, look how easy it is for us to sell some shares. We've been, have potentially shares in this company for like 4, 5, 6, 7, 8, 9 years, and it's been so hard work to sell shares, and now I can actually sell some shares off, and it's so easy to do it. You can see why they would probably want to do it, and that's why the lockup and was created really. So that might be the reason why. And Hims and Hers is a stock that came through a SPAC. If you look at the share price, it did really well, but that was still in the lockup period, and then it went down, and then we finally gone back up again. So for a lot of insiders in Hims and Hers, they basically had the lockup period where it was a good valuation to sell the shares, and then eventually when they could sell the shares, it was like $4 or $5, and it was like the stock came through on a SPAC at like $10. So why would they want to sell it now at 50% of where it is right now? So a lot of them that have now had the ability to sell shares have only finally really had the opportunity to sell shares, even though the company's been public for nearly 2-3 years, have only finally got to a decent value where they can sell some of the company. I know people that struggle to hold, claim to be a long-term investor, and they struggle to hold the stock for 3 months. Oh, it's up 10%. I'm going to take my profit off the table right now. so it's funny that you can sometimes see people criticizing them that struggle to hold a stock for 3 months, even though they're a long-term investor. And these guys have been, in some of these businesses for 7, 8, 9, 10, 12, 20 years. And then they get criticised for selling this. It's just absolutely crazy. So there's the lockup period there. The next thing is leaving. They might generally be looking at moving away from the business in a few years' time, or they have left the business, and it's time for them to maybe take some cash away, take some investment off here. Maybe you say, I don't really want to get rid of all my investment at one time. I just want to take some money off, or you potentially something like that. There's some interest in here where business or professional way that they're moving jobs or careers, or they're looking to exit somehow. We don't know if that's kind of going on in the background. Next thing, awarded shares. This can be something like they didn't actually purchase these shares. They actually got these shares gifted to them, awarded to them, or some compensation. And they actually think, you know what, I'm happy with the shares that I currently have in my allocation. I'm just going to take these ones off the table. So there's a lot of that goes on as well. Next one, need finance. We don't know what they personally have going on in their financial life. I'm sure there's points in your life where you've gone, oh, you know what I could do with a new car, and I haven't got that much money in my bank account, and I've got all this in shares. Maybe I just sell this position a little bit to help that. Oh, I need to buy a house. Maybe I just sell these shares off to help fund that, or whatever it may be. They have kids. The kids are off to college. They need to give them some funding. You don't know what's going on in their personal life. Sometimes they might need funding for some reason, and if they think, I've got all these shares tied up, a lot of these insiders will have a lot of their wealth tied up in these businesses. So for them to maybe make some purchase or need capital in personal life, they might need to do that. That's another factor that you've got to think about. The next thing is shares have gone up. A lot of these insiders are like me and you. Some of these insiders might have been buying the stock at $3, $4. And the thing is that, like me and you, that were buying it at $3, $4, and you're now up 100%, 200% on your position, how many of you guys turned around to yourself the other day and went, you know what, it's been a tough 12 months, it's been a tough 24 months, I've got this, this capital that's up 100%, 200%, 300%, you know what, I'm going to take a little bit of profit off the table. So there's me doing that. I personally sold this stock, some of my stock, weren't a good amount, but a little bit of a trim. I personally sold some of my shares off because I was up a lot. So I can't sell my shares in the business, like trim the position by 3-4%. I can't sell them shares in my business and then turn around to an insider and go, why are you selling your shares? You shouldn't be selling your shares. Like, I can't do that because I've done it. I trim my position as well. So you can't go around criticizing shareholders if they have an investment that's done very well, that's up. Because a lot of these insiders here, when it would have gone through the SPAC and now it's $12, a lot of them insiders will have nice share appreciation from that. So you would do it, you probably would have done it, and then you can't go around criticizing insiders because they did it. So yeah, that's what I'd say on that one. And obviously the next one is that maybe bought some shares at a low price and they want to take some capital off the table. So there's all these reasons that can play into it. So there's, like I said, buying is the bigger indicator because there's only one reason why they're buying. Selling, there's a lot of factors that might be coming in on why they are selling some shares. Now, there is some issues that if this is happening, if insiders are selling doing this, that's when it does get a little bit worrying. And I would say the signs where it gets a little bit worrying is where there's a lot of insiders selling, so you have multiple positions selling. The chunks they're selling are massive chunks, so it's not just like a 10% sell, 20% sell. If it looks like 10%, 10%, 10%, then you look at that one thinking, okay, they're selling a lot of their position off, and potentially you could factor in that, okay, they're aggressively selling their position off, and let's say they own, you see this sometimes with like institutions, and the institution might own, like 40% of the business, or a big shareholder that was an early investor into the company, they have a big chunk, and then massively reducing the shares. You might think, well, they might be looking to actually exit this position, and if that's happening, that could keep the share price compressed. So that could be something that you weigh up. If there's a lot of insiders selling, if they are selling what looks like completely, if they went from a massive insider holding to a very thin insider holding, maybe then you start considering, well, why, if it's such a good future, why are so many insiders looking to move away from the business? That's where it kind of gets maybe a little bit of a concern. But with insiders potentially only selling, 10% of a position that they've never sold before, and the stock's gone up absolutely crazy, I would say that sometimes people look into that far too much. And as long as there's still a major amount of holding inside the business, which there is with the company that we're referring to, which is Hims and Hers, I'd still believe the CEO is one of the biggest, if not the biggest shareholder. I'll probably show you that on screen if I can find it right now. So I think that sometimes this gets massively blown out of proportion, and hopefully today this video here helps you look at this issue, and when you go forward it might help you when you look at insider buying and insider selling, and have a little bit of context on how much that actually means going forward for this business. Hope you enjoy it, and as always guys, anyway, if you could hit that like button, that's absolutely amazing, and I'll catch you in a bit.